Voltas, as you're aware, is a Tata company. We have positioned Voltas today as a global air conditioning and engineering services company. We've actually been in Indian business for almost 50 years. We have been in the international market for almost 30 years. 2006, we ended the year with a turnover of about 1900 crores.
About the engineering agency services where you were involved into trading of mainly textile and mining equipments from global and Indian players. You earn almost 35% PBIT margin on this business. And your customers know of that because you have been earning these kind of margins for the past few years. So what is it that's stopping your clients to have their own presence and earn such kind of margins in the Indian market?
Actually, it's not truly margins, you would possibly call it as profits. Because it doesn't relate to the turnover. We don't book turnover to our accounts. It's only the commission income and the engineering service income. So truly it is not really margins. If you look at margins, obviously it cannot be so high. So it's basically profits. It's easier to term as margins purely because it's related to the turnover of Voltas. But we don't really bring in the turnover of the business into our book of accounts.
But your engineering agency services, the PBIT at the PBIT level, as a percentage of its its total revenue, segment revenues, I think it's around 29, 30.
It's around 28%, that's right.
So what stops the global players to have a direct presence rather than trading the goods through Voltas?
All one can say is that the global players have to put up the infrastructure that we have put up. They'll have to spend much more than what they are paying us.
Another question from our side is you are embarking on a aggressive growth in the global markets. You are taking up projects in the Middle East and other global markets as well. So aren't there any problems on the people front, the challenges of integrating cultures, integrating different kind of people across your global markets? So what kind of challenges Voltas facing over there?
In fact, you're right. I think that's the major challenge today. The two major challenges that we have in the international operation, one is getting the right people at the right time with the right qualifications and experience. And number two is the challenge in terms of risk that we have. Especially when you take up projects beyond your shore, you need to manage risk. For both, we have a program in place within the company. In terms of people are concerned, there are three types of people. One are project managers, where at this point of time there's not really a problem. At least for the order book that we have today and for the next 1 year, I don't think there's a problem. The middle management staff, to a certain extent, we do not have a problem for the next 1 year. But we have started training people. And in terms of the third segment, which is the actual worker segment, we are now picking up people from 7 to 8 different countries. And that is where I think even the customer country does not allow you to have visas for one country. So we are now picking up people from Nepal, Sri Lanka, Philippines, Pakistan, UAE. So almost 7 countries are now represented in the Voltas projects internationally. So is the case with also the middle management. But yes, going ahead, I think that's a challenge that we need to manage.
The topic I have to speak about today is on fund of funds. Does fund of funds really have a value proposition for investors? If yes, what that is. So what we do see is that there is this huge range of funds, and I'm sure several of you who may have mutual funds in your portfolios would have a range of funds there. And in these days of furious selling of NFOs, there are more and more new funds. Several times I get mails from investors who are asking me for, look at what I have in my portfolio and what should I do. And it's usually a long list of equity and an equally long list of mutual funds. Now, one of the things that we see here, for instance, is that the actual performance of funds is really hugely diverse. As you can see here, while people today are not asking the question, should I go to a mutual fund? The question really is, which mutual fund? How do I choose amongst the several mutual funds that are available? And what happens here is, as someone was pointing out in the morning, it is not as if investors are asking for benchmark returns. Beating the Sensex is virtually something that a fund manager has to do as a basic hygiene factor. I mean, I'm coming to you because I expect you to do better than the index. And then there is this question of asking how much of outperformance. And there, if you see, the whole range between the top fund and the bottom fund, all right, can be as large as 60%. That's what this graph tries to show. Shows that there is a huge dispersion. If you really looked at your entire mutual fund portfolio and computed the returns for your entire portfolio, it is very likely that your mutual fund portfolio is actually underperforming the market. Whereas individual chunks of the portfolio could be doing well. You could have picked up one smart fund, or you could have picked up another one, or there are surely few laggards there along with the leaders, which creates a situation of the entire portfolio being an underperformer compared to the market. I mean, as most of us are wont to, we tend to focus on what's doing well on us and tend to generally not bother too much about what is not doing well, right? We talk about the successes to others and convert the failures into long-term investments, right? So, what happens really, therefore, is, given this huge variance in fund performance, the question today is, what should determine the choice of funds? How do you choose a fund? Do you go by who the fund manager is? Or do you go by what the fund house is? Or do you go by what the reputation of the fund house is? If you were to look at processes, would you be able to look at what these processes are? Or in other words, how does one go and create an equity fund portfolio? Because if you decide that a part of, I'm focusing on equity within the context of what we are saying, but the whole idea works in debt funds as well. Now, what kind of equity portfolio can be created? Because, when I try and include funds, or when we try and take funds out or alter what is there in the portfolio, what are the considerations? I do know that one of the most commonly followed ways for investors to buy funds is to look at past winners.